Hello and welcome to Crypto Weeklies. In this video, we are going to analyze Hedera and its token HBAR, conduct machine learning based price forecast, regression analysis, accumulation strategies, and estimated bull run peak for HBAR. None of the content is financial advice. And today, Hedera has rallied a lot by about over the last 24 hours, about 40%, price at around 23 cents. Over the last 7 days, about 68%. And we had covered HBAR on our channel. This is our channel at least 15 times during the bear market and the recovery year of 2023 and 2024. Since the channel began, you can see back then, especially in some of the videos, you would find that the forecast established by the channel's videos back then is very close to the reality of today. You can see also some of the accumulation strategies and the and the content related to estimated bull run peak and how they are panning out as of now. All of the content available on Crypto Weeklies over here, the website, the YouTube channel, and if all you have to do is search for HBAR on here to find the relevant content. And if you enjoy this somewhat accurate forecasts, please subscribe, also give this video a like. Now that we have covered this, the content that we will be talking today, apart from the technical analysis over here, most of it is available on cryptoweeklies.com. The link on the bottom of your screen holds all of the information related to not just HBAR but most of the top 100 cryptos by market cap and their accumulation strategies, as well as forecast graph, which is the machine learning based price forecast, regression analysis, and the three accumulation model, as well as some of the analytical indicator such as peak value, which is how far are we into the bull run, analysis of the last 24 hours related crypto TLDR news summarizer, narratives which are popular over the crypto market, and social sentiment related to those narratives in the narrative cloud, as well as return on investment related metrics such as what is the year to date ROI, the heat map, which we'll be starting with today. The heat map over the last 24 hours has provided HBAR as the clear winner of the last 24-hour change, as well as over the last 7 days as well. And also the last 30-day performance for HBAR has been the best in the top cryptos, amongst the top cryptos. Over the last 90 days, HBAR is number 2, slightly overshadowed by XLM. But you can see the crypto of the day per this performance performance over the 4 time periods is HBAR up by 1777, 475%, and 400% over the last key performance periods. In terms of the peak value bull market completion estimator, it estimates that about 53%, we are 53% into the bull market, so slightly above, slightly more than half the way through the bull market. You can see, compared to the last bull market of 2021, which started in the post halving of 2021. Back then, in the middle of February 2021, per this analysis, the completion was at around 32%. This analyzes how the top 100 cryptos are doing with respect to their price based volatility, also multiple risk factors such as alpha, beta, risk adjusted return, and normalizes them between 0 and 1. 1 is where we are 100% completed the bull market journey and we are close to the peak. 0 is when we are at the valley, where at the depths of the pit of the bear market. And again, they are color coded based on risk levels as well, in increments of 0.2. So anything below 0.2 is the lowest risk. Again, we were in this lowest risk territory not too long ago, as late as September 17th, 2024. The low risk is between 0.2 and 0.4. We were here in November itself, 17th or 19th of November. Moderate risk is where we are currently. We spent a decent amount of time in 2021 as well, also in the early bear market of 2022. Again, in the moderate risk, the risk to reward ratio is almost 50-50. So again, have to be more cautious, as the risk levels increase, the higher the risk level, the more the chances that you're buying the top. So the next level to watch for is this high risk level, which signals a change in the market where the risk levels are between 60% and 80%. You can see throughout the earlier part of April of 2021, and then again after the summer lull of 2021, again back in September, October, and all the way through the early stages of November to the middle of November of 2021. Crypto market was in this high risk territory, and towards the early part of the bear market year of 2022. The highest risk level is between 0.8 and 0.1. You can see only two instances, first in April-May time period, and then again back in November of 2021. We are not in this environment, but we are constantly looking for this signal where the risk between 0.8 and 0.1, if the bull market completion is somewhat closer to 80%, that's where the eventual blow off peaks for major cryptos have occurred at per the last bull market. So if you are interested in keeping track of these kind of analytical based completion of some of the key milestones in the crypto market, please subscribe, also give this video a like to stay updated. Today the overall sentiment score is at around 59%, almost 60%. That means the news cycle, most of the narratives are bullish. Some have this red color, which are kind of bearish, but most of them are bullish. This is crypto related content over the last 24 hours. You can see the narratives which are gaining popularity again. Hedera and it's Hedera, which is a crypto associated with HBAR, that had a meaningful presence over this narrative word cloud for almost a couple of weeks to almost an entire month. Now that narrative has panned out and into translated into a boosted price action over the last 15 or 20 days or so. But again over here right now, this is the latest narratives which are popular. Again, Bitcoin, XRP, Cardano, so some of the top cryptos. By market cap, the overall sentiment is bullish. There are discussions related to strategic reserves. Thanksgiving holiday. These are over the last 7 days. What are the most discussed narrative on social media platforms such as YouTube and X? And now that we have covered, again, the opposite of bullish narratives is bearish narratives. All combinations of bearish content and are much smaller than the content associated with bullish sentiment. And one key finding over here is as the mind share of crypto market is gearing towards the altcoin related content, and altcoin related social sentiment is increasingly bullish right now. That means the altcoins are competing for mind share as much as Bitcoin and Bitcoin related content is at this point in time. And this, the sharp increase in this altcoins narrative, and HBAR being one of the altcoins, kind of helps put the current rally in perspective. And we discussed this crypto performance related analytics. Now we are going to talk about some of the technical analysis related to HBAR. Then we'll conduct machine learning based price forecast. So the fib levels from the previous high of around 57 cents to the previous to the market cycle low of about over here at around 3.5 cent. Of that move, we have retraced to 0.38 fib level at around 23 cents. The next level to watch is the 0.5 fib level at around 30 cents. And the 618 would be a key level to watch in terms of the resistance at around 36 cents. So the 30 cents and the 36 cents are to the levels to the upside, and for this week we need to see if the price stays meaningfully above 23 cents. So these are the three levels for HBAR at this point in time. The market is bullish. The 20-week moving average and 21-week exponential moving average is between 7.5 cent and about 9 cents. We are almost more than 2x from those levels. So that would represent a represents a deviation from the 20-week moving average. We'll capture those deviations in the accumulation strategies as well. Now we'll spend some time discussing the forecast that our machine learning model has made. And again, this is not some prompt engineered model. This is curated by an experienced data scientist. Again, I have about 8 to 9 years of data science experience, especially in machine learning. So this weekly price action of HBAR in this line, in this white line, has been used to train the machine learning model on ARIMA, LSTM, and XGBoost machine learning techniques. The three forecasted scenarios by the model's output is: first is the directionality based forecast. Is the price action more likely to go up or down? This is established by this pink line. You can see a series of higher highs and higher lows estimated in over the next 6 months. That means the directionality of the forecast per the model, all things constant, is more bullish than bearish. The bull case scenario for HBAR per the model is between 34 cents and about $1.73. $1.73 HBAR, again in terms of its tokenomics, would keep if let's say that circulating supply reaches about 40 billion, then 1.7 times of this 40 billion would be somewhere between 65 billion market cap and 70 billion market cap, if that were to pan out. And again, as you are looking at HBAR, the coin market cap, this is coin market cap, the coin market cap based market cap ranking for HBAR is always increasing. You can see right now it's ranked number 19th by market cap, but if you go to the historical snapshot for HBAR, let's look at how HBAR was doing same time in the last halving year, that is in 2020. Let's look at how HBAR was doing over here, and try to compare the relative position of HBAR of today with respect to HBAR back then. Let's look at Hedera, and back then it was called Hedera hash graph. Now it's called HBAR. It was in 2020 it was ranked number 67th. Now today, if we go back to today and go to the historical snapshot of, let's say, last week, let's look at last month, November 3rd of 2024, and type in Hedera over here. Let's say it not too long ago ranked number 49th. Now the mind share and the market cap based rank is all the way about 19th. So this is as of December 1st, rank number 22. And let's look at the what happened after the post halving year, same time, 2021 for HBAR, rank number 37. So you get the idea that in terms of rankings, HBAR is constantly getting most of the mind share. So over here, let's look at the relative ranking for HBAR. Now it's ranked number 21. So again, closer to this Litecoin's market cap of about 9.2 billion. This needs to be updated. I think Pepe has a market cap of about 8.9 billion, whereas these two have slightly higher market cap. Again, these as the market is getting more and more volatile, this market cap based rankings are much closer. These three are very close in terms of market cap. So now we talked about the bull case for HBAR. We also are going to discuss the bear case. We like to cover both scenarios. What market throws at us is always going to be unknown. The market cannot always go up or go down with time, so it's better to be ready for all the potential scenarios. The 1 standard deviation floor for HBAR in a bear case is between 10.5 cents to about 24 cents. And we talked about the bull case at 34 cents, between price action between 34 cents and $1.73. And again, the week by week forecasts are also available in tabular format. This bull case at around 68 percentile represents this yellow line. You can check out what could theoretically be a 1 standard deviation ceiling all the way uh, throughout the middle of May of 2025. So almost 6 years, six months into the future. So this is the machine learning based price forecast for HBAR. Now that we have conducted that, we'll go to the regression analysis. The polynomial regression function, which this is a non-linear model which tries to understand what is the fair value based on the price action and a non-linear relationship between price and time. In the bull phases, the function goes up with time. In the bear phases, the function goes down with time. So the fair value right now is going up with time. That represents a bullish surge in the market from about 4 cents. Now the fair value for HBAR is coming in at around 16 cents. So the price action is almost 1 standard deviation residual applied to the, so this is the yellow line is the 1 standard deviation residual applied to the fair value. And you can see that in the bull market it's not too uncommon that the price rallies beyond this yellow line. So the 2 standard deviation residual is definitely where most of the resistance, because that represents about 95% of the price action to the upside, is within this within this orange line. I will get rid of the yellow line for here. The orange line right now is coming in at around about 48 cents. So a 48 cent HBAR would be, if the price were to go to 48 cents today, would be considered as overvalued as back in 2021. Back in 2021, that overvaluation territory was at around 35 cents. So, and you can see there are certain instances where price does go above the orange line, but again very few weekly closes above the orange line again, and this orange line is for ceiling for is at 48 cents is for this week. That means if the rally were to continue and not hit this 2 standard deviation ceiling in the coming weeks, that function again has an upward slope. So likely scenario for HBAR's regression function based 2 standard deviation ceiling, that is this orange line extension, could be higher than 48 cents at if that rally follows this trajectory. So and the best thing about this website is all the models are updated every day. So the latest regression output is applied, so the model is never stale per se. And again, you can access this model over here under the regression or the heat bands. We like to call them heat bands because they represent the certain heat levels. Again, you can, the opposite of this is this lower band, which helps identify the lower standard deviation or 1 standard deviation bottom scenario. Applied or residual applied to this pink line helps understand what is the best time to DCA or best time to get in the market is below this price action whenever it's below this green. And you can see that we spent about the later half of October, also early part of November 2024 below this 1 standard deviation residual. That represents 68 percentile confidence or 68 percentile threshold, below which only about 32%, or if you divide that by to almost 16% of the price is below this level. So likely you are looking at a bottoming pattern at that point in time. Again, we spent almost the first couple of weeks of November below this green line. So that after that rally, we took out not only the 1 standard deviation bottom, the fair value, and we are looking at the 1 standard deviation ceiling. At this represents this yellow line, and the green line represents about 68% the price action staying within these bands. That 1 standard deviation ceiling for HBAR is coming in at around 26 cents. So I would imagine if the price were to go to above 26 cents, there would be a significant resistance at that point in time in terms of the weekly average price for HBAR. Now we'll be covering the 3 accumulation models, and then we'll have a bull run estimate for HBAR. The SMA model establishes how far the price has gone away from the 20-week simple moving average, and based on the proportional and time adjusted difference between the calculation between the difference between the price and the 20-week moving average, that's how those risk levels are assigned, and the color codes are assigned based on the risk levels. The purple and the blue phases of the market highlight that the risk of DCAing into HBAR is very low, again per the SMA model. This is a model which does a better job in identifying the tops than the bottom. The second model we'll show is identifying better better identifies the bottom than the top. So we'll look at let's say some of the hypotheses that let's say whenever the risk associated with dollar cost averaging HBAR is higher than 60%, that's when you halt dollar cost averaging or take some profit at this level. Again, this is not financial advice. That is not certainly not the worst time to take profit. Again, right now the risk level is at around 67%. During the some of the blow off top phases of the market, the risk does go slightly higher than the current level. You can see in March 73%, this is 2021, again 93%, 100%, 78%, you get the idea. So this is the model identifies the top based on again a phase where the price has moved so far away from the 20-week moving average. That makes essentially the price very unlikely to go too far high into the future. Again, this is one model identifies the risk at around 67% at this point. The dollar cost average model again takes a cue from this polynomial regression function, you can see, and this model helps identify when it's the best time to DCA based on how the price is doing with respect to again time adjusted as well as proportional difference between the price and the fair value regression function. And this hypothesis again, if the hypothesis is that only dollar cost average when the risk levels are less than 20%, this model helps identify those zones, helps avoid the zones where the risk levels is higher than 20% in the accumulation journey. Again, and if the hypothesis is only DCA when the risk is less than 10%, these levels are applicable, and these phases of the market cycle do help identify some of the best time to dollar cost average. Right now, per the model, the risk associated with DCAing HBAR is coming in at around 36%. So again, this is I would say does a better job of identifying some of the low risk time periods than the high risk time periods. So the last model is the time weighted average price. This is the blue line which establishes the time weighted average price, and based on the relationship between the price and this blue line, this color codes are assigned and the risk levels are assigned. The key idea is whenever the price is below this blue line, which is the time weighted average price, that zone offers a decent buy territory, again an accumulation zone for multiple years, assuming that this again does not eventually find the actual bottom, but provides a range below which the dollar cost averaging makes the most sense. We spent almost from May 2022 till ignoring these few days over here between May 2022 till about November 2024, almost 2.5 years below this blue line. Now the price has shot above the blue line. The blue line represents the time weighted average price coming in at, right now it's coming in at around 10.5 cent. Price is about 2x away from the time weighted average price, representing this similar to the risk territory, similar to about June, July, August of 2021, which was kind of a quite quiet period in the last bull run. So the risk level with this approach is at around 62%, and a composite of all the three models for HBAR. If you look at what is the potential risk reward at this point in time for HBAR, the regression model, the DCA model that we looked at says 30% risk, time weighted average price 55%, SMA model 59% risk, and the weighted risk is at around 43%. Estimated bull run target based on the risk reward analysis is at around 54 cents for HBAR, and that represents about 2.19x from the current price of about 25 cents. So with this, I would like to conclude the video. Hope you enjoyed the content. If you did, please subscribe, also give this video a like, and hope to see you again tomorrow. Thank you. Have a nice day. Bye bye.